What makes an investor successful? Have you ever pondered this question? It's a thought-provoking inquiry, isn't it? Today we're diving headfirst into the world of successful investing, exploring the crucial role of good habits. We're about to uncover the top 10 habits that set successful investors apart from the crowd. These are the habits that can transform your financial journey, leading you to a future of increased prosperity and security. So, are you ready for the revelation? Stay tuned if you want to discover these game-changing habits. The first habit of successful investors is that they always have a plan. This isn't about guessing or hoping. It's about crafting a strategy that will guide your investment decisions. Think of it like setting a course for a journey. You wouldn't start a trip without knowing your destination, would you? In the same way, an investment plan outlines your financial objectives and the steps you'll take to achieve them. Having a plan in place also serves as a safeguard against emotional decisions. When the market gets rocky, it's easy to let fear or greed drive your choices. But with a solid plan, you have a roadmap that keeps you on track no matter what the market conditions are. Your plan might include elements like asset allocation, risk tolerance, and your investment timeline. It will be your North Star, guiding you through the choppy waters of investing. Remember, failing to plan is planning to fail. Successful investors never stop learning. The investing landscape is much like an ever-changing puzzle, constantly evolving with new pieces being added or old ones shifting. It's a world where yesterday's rules might not apply today, and today's strategies could be obsolete tomorrow. Successful investors understand this dynamic nature and embrace it. They continuously educate themselves about the global market, its volatility, and its trends. They stay updated with emerging industries and technologies, keen on spotting opportunities where others see uncertainty. They comprehend that every investment strategy, old or new, has something to teach, and that learning from them can provide an edge. They voraciously read books, attend seminars, listen to podcasts, and scour financial news. They network with other investors, sharing insights and gaining perspectives. They understand that their greatest asset is not just their portfolio, but their knowledge and their ability to apply it wisely. In the ever-changing world of investing, they recognize that knowledge is power. The third habit is diversification. Now let's think about diversification as a safety net. It's the financial equivalent of not putting all your eggs in one basket. In the world of investing, this means spreading your investments across various asset classes, sectors, and geographical regions. Imagine if you invested all your money into one company and that company goes under, you'd lose everything. But if you diversify, investing in a variety of companies, sectors, and even countries, the loss from one bad investment can be cushioned by gains from others. Diversification reduces risk. It's a strategy that allows you to weather the ups and downs of the market, and over time, it can lead to more consistent returns. Remember, the goal isn't to hit a home run with a single investment, but to build wealth steadily and securely over time. So, diversify your portfolio, spread your investments, play it safe, never put all your eggs in one basket. Patience is a virtue, especially in investing. It is the cornerstone of a successful investing journey. Picture this, you're a gardener. You've planted a seed, watered it, and provided it the right amount of sunlight. Now, you wouldn't dig it up every day to check if it's growing, right? Similarly, in investing, once you've done your research and planted your money into a promising venture, you need to give it time to grow. Patience helps you ride out the market's ups and downs. It allows you to keep a cool head, preventing you from making hasty, emotional decisions that could derail your financial goals. It's the slow and steady, the ones who wait, who often win the investment race. So take a deep breath, trust in your research, and let your investments do their thing. Just like a well-tended garden, a well-managed portfolio needs time to bloom. Remember, Rome wasn't built in a day. Discipline and consistency form the fifth habit. Now, why are these two traits so vital in the world of successful investing? Well, it's simple. Just as a marathon runner can't hope to win the race without consistent training and discipline, neither can an investor hope to succeed without these same qualities. Successful investors don't just make a plan and hope for the best. They consistently follow their plan, maintaining discipline even when the market conditions get tough. When the stock market is on a roller coaster ride, it's easy to let emotions take the wheel. But successful investors know better. They stick to their strategy, not swayed by the whims of the market. This discipline extends to their research habits as well. They don't just read up on an investment once and then forget about it. They consistently educate themselves, staying current on market trends and changes. Remember, in investing, as in life, it's not about the sprint but the marathon. And consistency yields results in the world of investing. Successful investors think long-term. They understand that the journey to financial success isn't a quick dash, but a steady, paced race. Remember, Rome wasn't built in a day, and neither is a robust investment portfolio. Long-term investing is about seeing the bigger picture and not getting swayed by the market's daily ups and downs. It's about having faith in the fundamental strength of your investments, even when the market seems to be against you. When you think long-term, you're not just investing. You're planting seeds that will grow into a forest. These seeds might take time to sprout, even years, but once they do, they can provide returns that far outweigh the initial investment. Moreover, long-term investing allows the magic of compounding to work in your favor. Over time, your earnings start earning, leading to exponential growth. In essence, successful investing isn't about making quick bucks. It's about making thoughtful, calculated decisions that pay off over time. Investing is a marathon, not a sprint. The seventh habit is adaptability. A key trait of successful investors is their ability to change their strategies based on market conditions and new information. This doesn't mean they're fickle or inconsistent, but rather they're responsive to the dynamic nature of investing. Let's take this in perspective. Imagine you're driving down a road you've taken 100 times, but today there's a detour. You wouldn't stubbornly keep driving straight, would you? Of course not. You'd adapt to the new circumstance and take the detour. It's the same with investing. Markets fluctuate, new policies come into play, economic indicators change, and new investment opportunities arise. Successful investors stay informed and are willing to pivot their strategies accordingly. They understand that what worked yesterday might not work today, and what works today might not work tomorrow. Remember, being adaptable doesn't mean abandoning your core investment principles. It means being flexible within those principles based on the current investing landscape. Stay adaptable, stay successful. Successful investors regularly review their portfolio. This habit is a cornerstone of effective investing. It's not about frequently buying and selling based on the market's ups and downs. Instead, it's about a periodic check-in to see how your investments are performing. Are they aligning with your financial objectives? Are they moving you closer to your financial goals, or are they falling short? These are the questions successful investors ask themselves when reviewing their portfolio. Just like a professional athlete reviews their performance to identify areas of improvement, successful investors do the same with their portfolio. They understand that the financial landscape is dynamic, and that their portfolio should be too. However, it's important to remember that portfolio review isn't about making drastic changes. It's about making calculated adjustments based on performance and changing goals. It's about ensuring your portfolio continues to work for you, even as your financial circumstances and goals evolve. So remember, keep an eye on your investments. Know when to cut your losses. That's the ninth habit. Now, this might sound a bit counterintuitive. After all, we've talked about patience, long-term thinking, and consistency. But there's a fine line between patience and stubbornness. Successful investors understand that not every investment will turn out to be a winner. Sometimes a stock or a venture just doesn't perform as expected. The key is to recognize when an investment is no longer worth holding on to. If you've done your due diligence, reviewed your portfolio regularly, and the numbers still don't add up, it might be time to cut your losses. It takes courage to admit a mistake, but it's an essential part of the investment journey. You can't always predict the market, but you can control how you respond to it. Remember, it's not about being right all the time, it's about being profitable in the long run. It's okay to accept mistakes and move on. The final habit: stay emotionally detached from your investments. You see, our emotions often play tricks on us. They can cause us to hold on to investments longer than we should, or panic and sell too quickly. This emotional roller coaster can be a serious threat to our financial well-being. How can we combat this? Well, it starts with understanding that investing is a strategic game, not a sentimental journey. We're not holding on to stocks because we love them. We're holding because they're expected to provide returns. It's crucial to make decisions based on data, not feelings. This means looking at the facts, analyzing the numbers, and making rational choices. Never let fear or greed guide your decisions. Remember, investing isn't about getting lucky, it's about being smart. It's about seeing the big picture and making well-informed decisions. So the next time you're faced with a tough investment decision, take a deep breath, clear your mind, and think logically. Invest with your head, not your heart. So there you have it, the 10 habits of successful investors. From the importance of having a clear plan and embracing continuous learning, to the wisdom of diversifying your portfolio and staying patient. Remember, discipline and consistency are key. Think long-term, adapt when necessary, regularly review your investments, and know when to cut your losses. Above all, stay emotionally detached from your investments. Take advantage of these habits, and you might just find yourself on the path to financial success. If you want to see more like this, leave a like and subscribe.